And N Kamakodi, the MD and CEO at City Union Bank, joins in to highlight their numbers. Mr. Kamakodi, great to have you on the show. Tell us a little bit about your growth in advances. Your growth is slower than that of the market, and during the year, you had guided for a 15% plus growth. What is causing you to grow slower?
See, basically, if you had a chance to look into at the year beginning last year, we were not very robust about the growth. But in between, we felt we can increase our growth rate, and we were expecting things to improve. But we had some issues in between. Particularly, we had to strengthen our internal processes and systems. And in fact, we were balancing our growth between the both gold loan and also from the MSME loans. So all the issues are on the, they were there on the public domain. So we had to take some extra care before we actually press the growth button. In fact, we, took our legs off the growth pedal even before the COVID, somewhere in the, last quarter of the calendar year, 2019, just even before the arrival of the COVID. So the, in fact, we used to have an approval rating of about, our approval to new customers almost came down by 50% because of that decision, which we decided to, increase once again last year, which we couldn't do. But we hope this year we should be able to compensate for all such things. Nevertheless, we were able to protect our profitability. In fact, we could see the, our unwinding of NPAs and recoveries and all had, substantially improved. The NPA addition minus collection almost increased by about 250 crore in the financial year 23 compared to financial year 22. Despite having all other, issues, we were able to have a 23% growth in our overall profitability, and also having a return on assets at close to, 1.5% as we had, which had been our long-term average. We hope to continue with the same ROA and the profitability growth for the current year is what we see at this point of time.
All right, Mr. Kamakodi, so would you say then that the problems with regard to provisioning are now behind, and when can we expect you to accelerate your growth? What's the target for FY24?
Exactly, you are bang on. There were, we need to make some improvement in the overall, what you call our risk measurement and all, which we had learned in the from our experience in the past. So for which we have already started. Particularly, we had to make some changes in the upgradation in the digital lending processes, whatever we had done. In fact, for that process, we are in the process of finalizing what you call deal with Boston Consulting Group as our consultant to improve our digital lending processes, for which the activities are on. Those, the fine tunings and all will help us as we expect. The for the current year, we should be, we are aiming for about 12 to 15% growth, but bulk of the, it will be skewed towards the second half. So we will be starting the process of fine tuning, and we should be able to see these numbers coming as we move forward, and the incremental growth should get smoother by the second half.
Well, one more trend we are seeing is that the yields have not gone up meaningfully in Q4 FY22. Walk us through why that is happening.
No, you might have observed about 25% of our portfolio is with the gold loan, which has got a lower yield compared to our MSME proposition. And but sequentially, if you have got a chance to see, there is some passing of the, when the rate hikes happened in the system, some passing and all has happened. We have not gone into any portfolio purchase or co-lending or anything like that. Our entire growth rate is through the regular advances, whatever we had been doing so far, and no change in the, no major significant change in the composition of advances.
Right. So where should one see the NIMs in FY24, and what would be the target on the steady state?
They should be staying at the current level, maybe plus or minus 10 basis points. The point is that, the indications are that further rate hikes, the probability is coming, it is, decreasing. So some rate hikes which we had already done towards the end of the last year or beginning of the current year should be having some amount of impact on the yield. At the same time, if in the overall margins, some amount of, repricing of funds also, is something is remaining over a period of time which has happened. And also, you could see some amount of reduction in the credit deposit ratio, which is also contributing for that. So, considering all those factors, our NIMs should be staying at the current level, plus or minus 10 basis point is what we envisage at this point of time.
So where can we see your credit costs for FY24, and how should we expect your ROAs to pan out?
Basically, the credit cost number is something like we had about 90 basis point for the current year. Our, once the net NPA numbers come back to the pre-COVID level, these numbers may come down by another 25 to 30 basis point from the current level is what we envisage, which should be helping our improvement in the ROAs. But now, as we have clearly seen, we are able to see the we are already at our pre-COVID level average ROA of 1.5%. We said that we will be getting back to that level by the second half, but on overall year basis, we are almost there at 1.46%. So our long-term average had been 1.5%, and we will be our current numbers suggest that we have enough confidence to see that this number increasing as we get into the financial year 23-24.
Right. Congratulations on your reappointment also for 3 years, which the market has clearly cheered. Tell us about where should investors see the bank in the next 3 to 5 years, especially now with regard to its size.
We are currently at almost, nearing the 1 lakh crore of total business. So I would like to see the bank at least 150,000 crore total business by 2026 when I complete my tenure.
Mr. Kamakodi, we'll leave it at that.